Do you think the explosive growth of fintech, leveraging cutting-edge technologies like AI, blockchain, and digital banking presents a transformative opportunity for investors?
Right. I mean, it's a huge opportunity if you think about it. There are over 4 billion people are connected to the internet now. Most people have mobile devices and computers.
Yes.
And if you think about it, especially in the emerging market, there's significant growth there. So we can see fintech, especially in the wealth management, and you have access to more, you can invest through your phone and so on. It's growing and it's solving one of the most critical problems, especially in Asia and Africa, where the scale is huge, and most people, they don't have a traditional bank where most people have in the UK. So there's a huge growth if you see, for example, in China and Kenya, such as in Africa. It's a huge opportunity for investors to invest in there. And we can see as well there's fintech companies in the crypto space, which traditional banks are now providing, and they stepping in and providing access to people if they want to invest in cryptocurrency and other financial instruments as well. Can you share your insight on how fintech is not just reshaping the financial landscape, but is also creating novel investment prospects, especially in the areas that traditional banking has yet to reach and or innovate in?
Yes, well, I can draw on personal experience as well on this one, because I've opened two bank accounts with two of these new types of banks, online banks. And I've also got an account with Metro Bank, which does have branches, so it's a little bit different to these new banks. But what I've personally found is that it's refreshing to use them because they're so much more efficient. So for example, one of my accounts, Monzo, I was able to scan the cheque and pay it in just by putting in a small amount of data, and it just cleared like a normal cheque. And in fact, it cleared after 2 days rather than 3. So that was one example. Although some of the high street banks do offer that, but generally they seem to be quite good in terms of fingerprint recognition or voice recognition, face recognition, those kind of things, which is really good. They tend to have more of those type of facilities than other banks. And I found that underwriting decisions can be very, very quick indeed. I once applied for a loan with one of these emerging banks, and it was approved within minutes. I mean, you can take days, weeks, months with a traditional high street bank. So the speed of service is phenomenal, and they're very tech enabled, so you can do everything on your phone. And it's just a joy to deal with all that, because you get sick and tired of being asked your name, your date of birth, your inside leg measurement. It just drives you up the wall, really. It takes so long to get these things done. So they're very innovative, and it crosses a broad range of areas, not just banking. So yeah, I find it very refreshing personally.
It is. I think I was looking at this study as well. In the US, for example, a traditional bank to acquire a customer, it costs $1,000, whereas a fintech is $20. So you can see there's 2% of in fintech to acquire customers. You can see the potential and the scale here that fintech have in the long run.
Yeah, and of course these challenger banks don't have the same capital commitment, because they're not spending money building branches, and running branches are physically expensive to run. So they do have an advantage there. And it seems that the traditional banks are going to follow the lead of the challenger banks by closing all their branches. So they're going to end up the same anyway.
Yes. Yeah, it's quite interesting. What specific role would artificial intelligence and blockchain play in the next wave of fintech development?
Well, I think it's already doing a lot of these things. So, for example, it can be better with fraud detection and prevention. It can improve risk management and so on with AI. But also, you've got these new kind of products and services you can do. So this concept known as tokenization of assets, when you think about it, we've already got that, but not in digital form. Like, for example, if you own shares in a company, we've we all own shares in a big company. Lots of people own shares in the form of share certificates, although they are digitised, to be fair, these days. But there's this new concept called tokenisation that's come about, where you can use a digital wallet on the blockchain, where you can own a fraction of an asset. And shares are the obvious place to do it, because it's more secure and it's quicker and simpler to do. So this is increasingly becoming a new trend, and that's just one of the many improvements with artificial intelligence and blockchain. And of course, blockchain, for those who are not absolutely sure what it is, it's a digital ledger that records all transactions, and it's more secure than the existing systems we have in the traditional world, because of course blockchain is recorded on computers throughout the world. And there's so many computers recorded, and it's got that benefit of the spreading of risk, if you like, by not having it all in one data center, for example. And once it's recorded, it's very secure. At the moment, can't be hacked, not to my knowledge. So it's quite a safe place to have it.
Right. What do you think as well, like blockchain, for example? Most people I talk to, they are concerned about their data and their privacy, and where nowadays companies are selling our data and so on, where with the blockchain, your data will be preserved or received to you. As a result, in some cases, some people think you can get paid for by selling your personal data.
Yeah.
So do you see that as like a growth area of
course, yeah. I think it's going to be more secure than what the system we have at the moment. And I already personally own some assets, physical assets, that are tokenised. Or in other words, they're it's called fractional ownership.
Right.
When you think about it, people watching this video will have heard of owning racehorses as fractional shares. You might have a syndicate, say 10 or 15 people that own a share of a racehorse. Well, you can do the same with lots of other assets, but not easily. But with the advent of these digital wallets and blockchain, they're called NFTs, non-fungible tokens. So I own a number of collectibles. The latest one was a 20% share of a penny black stamp. Now that wouldn't have been possible before, but now you can buy these fractional shares, and that's quite an interesting development. And the other big thing is the cost will be a lot lower and it will be more secure. So I look forward to the day, one day, when you can buy a house and just press a button and you bought it. Because my personal experience of property buying is that it can take an absolutely age to buy a property. I've had properties I've bought that have taken, I've got more than one on the go at the moment, it's taken 10 months, and one property I bought took 16 months to buy, with no chain in these cases. So it should be easy enough just to press a button, because all of the information will be there, and it will be more secure than going through the traditional methodology today. DeFi, or other words known as decentralised finance, potentially disrupt the current financial ecosystem.
Right. If history is a guide, we've seen history always, technology evolve and some new technology disrupt things over time. And the world is currently on Web 2, which is the current system that we use. Your data is all over the internet.
Yes.
And Web 3, or decentralized, would be the Web 3, which is your data would be on the ledger, where you can control your data. And most people are concerned about their data. So within that, you can build a financial system, which is, they call it decentralized finance. And it's expected to completely revolutionize the financial system, for example, with banks and so on.
Yes.
So it will be more new financial system that will be on the internet, where your data would be, you have control over your
Yes.
data and privacy as well. So it's expected to build a lot of things on that. For example, you mentioned earlier tokenization.
Yes.
Companies would issue shares instead of buying it on the market. It would be token. People would buy token of each company and so on. And we see that trend. It will grow in the long run.
In a way, it's a threat, isn't it? Because at the moment, huge companies like Google, Facebook, etc., can benefit from having our free data.
Yeah.
But when you can control whether you release the data or not, how are they going to make any money, these companies?
That's the thing. I think these companies will have to evolve and adjust. Otherwise, we've seen history. Most companies die. Their average lifespan is 54 years, the highest that's probably we've seen. But the good thing is the new companies like Apple and Google, they have the technology and the data, and they've been buying companies and growing and so on. So if history is the guide, they have to either evolve or someone will replace them at some point. And most of this company knows that. But the good thing is the new technology now, like Google and Apple and so on, they have so much money in their balance sheet, so they can still either grow through innovation or they acquiring other businesses and so on.
They're in a very strong financial position.
And if you notice as well, they've been growing in every step. Like for example, in the financial technology space as well, Apple, they came out recently, but they still became a dominant player in the space.
Yeah, it's like my son Cameron was recently in San Francisco, and he got a taxi ride with a friend of his. And when he got in the taxi, he sat in the back. There was no driver, and it was a Waymo car. And Waymo is a Google company.
Yeah, it's on and autonomous.
So there's an example there. So they can always either buy their competitors in the new technology or create it themselves. Interesting.